The UK is technically now in recession. After the release of fourth quarter growth numbers, it's clear that the contraction has now lasted two consecutive quarters, which is a technical recession. Where it goes from here remains to be seen. Let's take a look at the figures as they broke at 7 o'clock this morning. The preliminary fourth quarter numbers, we get two more revisions to this, contracted by a margin of 0.3%. That follows a negative 0.1% that we saw in the third quarter of this year. So Rishi Sunak's pledge to grow the economy has suffered a big blow. And of course, it's all about headlines as we go into this next few months where we're expecting an election sometime before October. In 2023, the economy largely stagnated as it grew only 0.1% year on year. This was well below the 2.5% expansion registered in the US and weaker than the 0.5% growth seen in the eurozone. But there are signs the UK economy is turning a corner, with some economists agreeing that growth will strengthen over the next few years. Wages are rising faster than prices, mortgage rates are down, and unemployment still remains low. Let's take a look at the reaction to this in the markets. I want to show you 10-minute candles on sterling against the euro. You can see quite clearly here the drop that we've got for sterling against the euro, and so far as sterling against the US dollar is concerned, exactly the same direction of travel. And as we see, we are continuing to build on the downside, but now almost an hour away from the release of that data. Just going to quickly show you what's happening on the daily chart. Not too far away from some support just below where we are at 125.18. You can see here that sterling is down for a fourth day in a row, not too far away from that line of support. But the broad sweep is that the UK is now in a technical recession.